Hello, hello. I wanted to jump on here again tonight and just say hello. I realize that things have been quite hectic lately, and I wanted to share that life is what it is. We have those ups and downs, and it all works out. So the best is yet to come. So I'm pretty excited about working with you guys. I wanted to come on here tonight just to see if you guys have any questions that I can answer for you right quick. Can you believe it? We are into October. We have had so many crazy things going on, but here we are, and we got to live another day, and we are going to rest up and get ready for another day tomorrow. But I wanted to say hello to everyone, let you know that I have been spending a lot of time with the disaster relief, but I realize that you guys may have some questions that you need answered. So I don't want to let the fantastic crowd think that I have forgotten about that you have needs and your world may be as shaky as it seems here in East Tennessee right now, because I know that finances can make you feel that way. They can make you feel like you're not sleeping well or you're so stressed you can't breathe. So I want to answer some questions if you have any tonight here for just a few minutes, because I don't want you to think that I forgot that your problems are as important as what's going on here in my area. I don't want you to feel disregarded at all. I want you to know that I am still with my fantastic crowd. I am still thinking about your finances and the things that you have going on in your lives personally. And I like to take a step back sometimes. Probably heard me say in my other videos that when you're standing right up against that tree, you can't see the forest for the tree, right? So we have to back up sometimes, and it feels like what's going on in East Tennessee and Western North Carolina is overwhelming, and it is, but it is what it is. So we have to help everybody we can in the process. But I realize that if you're in California or you're in Texas or Washington State or Ohio or wherever you are, your problems are as big as what we have going on here possibly. And I just want everyone to know that I am thinking about you and what's going on in your life. And if I can help financially, I want to give you the answers that you need. So that being said, I do have, like I mentioned earlier this week, that I did open my calendar back up. So I'm going to take on some one-on-one coaching again, help people out individually if you need it. If you don't, please realize that the videos tell you every single thing you need to know, and you do not have to hire anyone to help you work out your finances, because I didn't. I started on my own, like I said, about 15 years ago. There wasn't a lot of videos out then. There seems to be a lot going on right now with people who are talking about velocity banking. So there's just a lot of information online today that there wasn't 15 years ago. So you could really do velocity banking without asking anybody anything or getting any help, because the information that I put in the videos, literally you could just live off of those, learn from those, and get your own finances in order without paying people to help you. I saw somebody and they were offering a course for velocity banking, and it was ridiculous, $4,000 or $5,000. And I'm like, $4,000 or $5,000, that would pay off a credit card or two. So I don't think that you guys need to pay for things like that. I mean, if you want to, go for it. But just saying, I have confidence that you can do velocity banking on your own. If you need a little push, I have a little one-on-ones that I'd be glad to push you with, but they're not expensive. I keep my prices down because I don't want you to be putting a bunch of money into something when you need to be putting it on your debt. Okay, so thank you. I have transferred all of my bills to my card. My car will be paid off in 1.5 years early, only paying 33.45 interest on the whole loan term. The payment will then go to pay off the credit card debt. Excellent. Good for you. I don't think you mentioned what your balance is. So you're only paying $33.45 on the whole loan term. That is pretty good. That sounds like you're really doing really good. But 1.5 years to pay off a car compared to the 6 or 7 years that they set you up on, that is awesome. Congratulations. Congratulations. Oh my goodness. I have worked with people this week that they thought they were so upside down, but when we looked at their numbers and start moving them into the right tools, they were out of debt so quickly. I had one lady yesterday, I believe it was yesterday, her total payoff ended up being like 3.5 years, and she had like 22 years left on on her mortgage. I know it sounds unbelievable, but we do this every day. So stay encouraged. You may think that you're upside down. You may think that you have 45,000 years left to pay off debt, but you don't. It's just what tools are you using? Are you throwing away a bunch of interest? That's what's important. What are you throwing away? We don't want to throw away interest at all. We want to keep that as low as possible, whether you use a line of credit or you use MoneyMax or whatever you can do to eliminate interest. That is what's going to make the difference, okay? Another thing is it's important that you are putting your income into the line. And a lot of people ask me, why don't I just put my cash flow into the line? You can do that too, but when you're placing all of your income into a personal line or a HELOC, now being not a credit card, because only the expenses you can pay with a credit card is the income you can deposit. In other words, if you pay for $1,000 in food and gas every month, then you could put $1,000 into a credit card and charge that back off as you go throughout the month. With a personal line or a HELOC, a home equity line, you can put all of your income into that line. And when you do that, you're keeping that balance low. So it's keeping the interest charges low. Okay. So that's the point of putting all of your income into whatever line you're using that you can pull right back out of and use as you need. The point being, you are always keeping your money working for you because it's sitting in the line of credit, which is keeping the balances down, which is keeping the interest out. I have negative cash flow. Do I need to get positive before I can do velocity banking? Yes, you have to get into some kind of positive cash flow because you'll only get yourself in deeper if you don't have a positive cash flow. So whatever is causing your negative, you have to figure that out first. You may be able to transfer debt into a line of credit and that will give you cash flow. I know that doesn't make sense. I wonder if I could write that out on the board. So let's talk about if you have a negative cash flow, and let's say you're negative $50, and I'm making this up as I go along, so be patient with me. But if you have a credit card of $1,000 and let's say your monthly payment is $50. Now this is your monthly, okay? Like I said, I'm guesstimating, but you could do a couple of things with this. This is exactly the way I started. I had a $700 credit card. It stayed at $700 and my payment was always $25. And I felt like I was broke. I mean, that's pretty sad. That should tell you just how broke I was, that $25 made a difference for me. And it was hard to make the $25 payment on that card. But when I heard about velocity banking, I learned that you could pay for your expenses with your credit cards. And that was all revealing. Even though I knew it, I just wasn't aware how you could use it. So I would start doing, in this case, it would be $1,000 a month to cover your food and gas, let's say. You have literally told the credit card company, hey, I paid this card off, but you didn't really. But it's okay because when this income went in here, this was eliminated or satisfied, not eliminated, satisfied. So you satisfied the $50 payment. When the income went in, guess what? You just broke even. Now you're not in a negative cash flow, you're breaking even, right? So your food and gas will come back out of this card throughout the month. So you keep putting money in here just to fund what you're using during the month for food and gas, for example. So this is one way that you may be in a negative, but you're not really. You're just using your credit card the way they taught us to use it, which was to make payments, right? So if you decide that, hey, I'm going to take my credit cards and use them for expense cards, when the income goes in, it satisfies your monthly payment, and now you're not in a negative, you are breaking even basically. Now this will have some interest, but it's not going to have much interest at all because guess what? You're dropping that balance. So the average daily balance is going to be next to nothing because you may go get $50 in gas today, okay? You may go get $100 in groceries tomorrow, and it will just add up throughout the month. So that's what keeps that balance low, so you're not paying a lot of interest. This is one way to help with your negative cash flow. Another way may be if you already have a line of credit. I see this every day, so I know it's happening. I'll see people that have, say, a $5,000 line of credit, and they may have, let's say that's at 14% interest. They may pay about $59 in interest. So when most banks, the way they will do the payments on these lines of credit is they'll either charge interest only or they'll do 1% of the balance. So that would be $50, and then you would add the 59. So this would be your monthly payment, $109. Okay, so let's say your payment due is $109 and you're $100 a month in the hole. Okay, so if you make $4,000 a month, you can put all of your income into a personal line of credit most of the time. So this was the balance of the PLOC. Your income goes in. Again, you're knocking that balance down. So this 14% is no longer $59. It would be based on the average daily balance. So let's just see what the average would be. And you would be paying about $35 in interest. So that's a couple of ways that you can be flipping your cash flow around a little bit, bringing it up out of the negative into hopefully a positive. I hope that helps. That was very quick and very basic and as elementary as I could make it. Recommendations for a PLOC? No, I do not. That has to come through your local credit union or local community bank or whatever's in your area. They're all different. All different banks offer different products and tools for you to use. It's just really important that you study the videos. The videos have different scenarios and they'll give you ideas maybe that you hadn't thought of before when it comes to whatever tools you're currently using. If you go to my Facebook private group, and there are so many questions that people ask, and it's really inspiring to me to see how the members go in and they ask each other questions. And then you'll have sometimes 2 to 50 members coming in and answering that question as to what they did. You know, I've seen people put in areas that they live in and they say, what bank should we use here in this area? And then, you know, you'll have others in that area come in and answer that question. So it's very helpful. If you want to join the Facebook group, please do. So if you go in, every day, people will post their scenario asking, what would you do in this situation? I try to go in and answer those myself quite a bit. I do personal posting in there, especially about what's going on in East Tennessee right now and Western North Carolina with the damage and with the GoFundMe that I have set up. First, let me take a second to thank all of you that have donated to that fund. You do not know how that is going to help here. We have IDES coming in. I'm going to volunteer helping to clean up homes, whatever they need help with. But now with this fund that is fantastic, we're going to be able to help them with more than just physical labor. We're going to be able to help them with the supplies that they need, with the food, the meals, the hot meals, the pizza going around, the water, the canned drinks, blankets, underwear. These people have nothing. They have lost everything. And I'm not talking about 1 or 2 homes. I'm talking about whole communities have lost everything. And I am super excited and thankful and so very grateful that you guys have donated to this fund the way that you have, because it is going to help us help so many people. So thank you, thank you, thank you. I cannot tell you how thankful I am that you want to help in this area. And I am so excited to see what all we can do with those funds. I can't wait until we start handing out. Like I've told you over and over and over, I'm going to have pictures. I'm going to have videos of what we're doing and where your money's going. So do not fear. It's coming directly out of my hands into the community. And I promise you it will only go to the places that are so needing supplies. You know, we can't help everybody, but we can help some. And that's what we're going for here. I only have a mortgage at 3.75, current value around 195. Should I get the most I possibly can with a second lien or attempt a first lien? You are going to need a 700 credit score. And let's just look at that. Okay, so if you're 195, I'm assuming you're not in Texas because I know they use different values down there. So 195, I'm going to assume that you're in a state that does a 90% loan to value. So a 90% loan to value should be what you would be able to get as a line of credit if you have a 700 credit score. Oh, you're in North Carolina. Gosh, I hope that you're not in the devastated areas. So a 195 value in the state of North Carolina should bring a 90% loan to value, which is 175,500. Loan to value at 90%. So that means that your line of credit may be about $175,000. So your balance, you owe 94,000. Okay. So the 94,000 would come out of this minus 94,000 to pay off the home, leaving you with $81,500 for your use if needed, or just leave it sit there. But this would be available. This 94,000 would now be your balance. And if you had $1,000 payment here, when your income goes in here, it would satisfy anything owed on this new line of credit. So now this $1,000 that you were paying here is cash flow going in here, and this is an interest only tool. So you would, when your income goes in, it would satisfy any payment that would be due, and the payment, the high right now for interest is 8.5. So that would be $665.83 for your first month only. Now that's just your first month interest. Remember, your cash flow is going to be bringing this down every month, okay? And let's say that you had $2,000 in cash flow. After you pay off your mortgage and gain the $1,000 you're paying for a mortgage payment, let's say that gives you a $2,000 cash flow, and let's see what that looks like for your payoff. So your interest being at $665.83, your average is going to be about $333 from the beginning to the payoff of this line of credit. So that means that with 94,000, you would pay this off in about 59 months. Okay, so with a $2,000 cash flow and with including your interest, this 94,000 would be paid off in about 59 months. Does that sound like a good deal to you or not? Because I don't know what your payoff is now. So thank you so much. I hope you guys have a great rest of your week. And you know what? I'm just excited that I got to have some of this time here with you. I appreciate you all so much more than you appreciate me, because knowing that you're getting the help you need financially has absolutely made my life, and I'm excited to do it. So I hope you guys have a great rest of your night, which is almost midnight here, so I guess I should go to bed. I look forward to seeing you in the next video, and I will do live streams to keep you updated on what's going on here in this area. Thank you guys. Have a great weekend.